In this video, I will show you a simple and very efficient strategy to carry out crypto futures trading. It is a step-by-step guide on how to trade Bitcoin or crypto futures on Bybit, Binance, or any other exchange you use using the ICT Trading Strategy for crypto. This is the second video on my 3-part series on crypto trading, covering beginners level to the expert level. In the first video, I introduced trading, spot trading, the trading strategy for it, how to set up your account, and how to fund your account. This video is on futures trading, and the next one will be on options trading. What I will cover in this futures trading tutorial is an overview of what futures trading is, the best exchange to trade it, how to set up your exchange account for futures trading, the tools that you need, risk management, the ICT trading strategy, and how to join my Signal group to make profit like this. The profits are incredible. This is a 571% gain, this one is 324%, and this is 473%. If you go through our Telegram group, you will see there are lots more like this. But the thing is that you can be given a signal and still mess it up. That is why you need to go through this training first. And guys, you will not see a tutorial as comprehensive and simplified as this video on how to make money trading cryptocurrency futures. If you see anyone, let me know in the comment section. I would like to take a look at it. If not, share this video on WhatsApp, Telegram, and Facebook. Share it any way you can and let others also benefit from it. I will tell you another reason you need to share it at the end of this video. What is futures trading? In simple terms, futures trading involves making calculated bets on the price movement of a crypto asset, usually after conducting technical or fundamental analysis or both. Let's say the asset is Bitcoin. If I take a long position, it means my bet is that the price will go up. If it does go up, I make a profit. If it goes down, I make a loss. On the other hand, if I take a short position, it means that my bet is that price will go down. If price goes down, I make a profit. If it goes up, I make a loss. So the good thing with futures trading is that you can make money when price is going up and also make money when price is going down. And of course, if your predictions are correct. This is unlike spot trading where you make money only in one direction when price goes up. Now, the explanation I have given so far is simplified. However, it covers all you need to know to get started with futures trading. I have made 2 videos on this channel on futures trading. The first one explains the history of futures and how it actually works in the background. Futures trading started with farmers and manufacturers to make the price of produce stable. In that term, it is basically a contract between the farmer and the manufacturer to buy or sell a raw material at an agreed price on a specific date, irrespective of what the market price of that raw material is on that date. This is what it was before traders jumped on the concept and started using it. If you want to watch that video, I'll leave a link to it in the description. In the second video, I explained the terminologies used in futures trading. Long and short, you should really know what it is because I mentioned it earlier. Leverage, this magnifies your profits as well as your loss. Many people don't know what leverage to use when they make a trade. I will show you in this video how to calculate the exact leverage you should use for each trade. Cross and isolated margin, funding rates, take profits and stop loss, liquidation, and a lot more. I explained all that in that video. I won't go into full details on this. I would suggest you go watch that video to get a comprehensive grasp of what futures trading terminologies are. What I will do in this video is to show you how to set up your accounts and the strategy to start trading futures profitably. The next is exchange. The exchange that I recommend for futures trading is Bybit. You can use Binance or any other one, but there are 3 reasons I recommend Bybit. One is that it is easy to set up and it has fractional leverage, which is useful for my strategy. Binance does not have that. 2 is that it has good liquidity for futures markets. It is number 2 worldwide, coming behind Binance. 3, when you register with my link in the description, you can earn up to $30,000 in bonus money depending on your deposits. Once you are verified and funded your account, you can also gain access to my A to Z crypto trading blueprints for free on afibi.com. To be able to trade futures using my strategy, you have to properly set up your trading account. Let me walk you through that. In the first video on spot trading, I showed you how to fund your Bybit account. I'm just going straight to tell you how to set up your account for futures trading. Now, this is actually a sub account I created for this particular video. Now, if you go to the assets section, you have funding, spot, and derivative. When you fund your account, the money will be in the funding. So to get to derivative here, you have to use this transfer to transfer the money from funding. You change this to derivative, then select the coin, usually USDT, and you click on it and confirm, and the money will move to your derivative account. This is the money used in trading futures. Now, to set up your account to properly trade, we'll go to derivative. So trade is for spot trading, derivative is for derivative trading. Now, once you're here, what you need to do is this. So you have the chart here, you have the trade. Now, what we're interested in is USDT perpetual. That is what we're interested in. Now, what you do is, you see these 3 dots at the top right corner. You click on it and you click on preference. Then you change this one way to hedge and you select apply to all USD per pairs. So all you have to do here is done. Then you have to change this to isolated. Of course, for each trading pair, you might have to adjust for isolated. When it's on isolated, this is where you enter your leverage. So leverage for long, leverage for short. You enter this for each trade you take using my strategy. And this is your market order. You mainly use only the market order and the limit order. So when you select the ETH USDT, if you click on it, you can see different markets. So say I want to trade LTC. So I'm going to select LTC. Mind you, not LTC Spot. LTC USDT Perpetual is written under. I'm going to click on that. Then brings me back here. I'll choose the trade again here. Then under here, I have to go and select isolated again. All right. Then select my leverage. I will show you how to calculate leverage. Then I want to choose limits order. I'll enter the price I want to buy at here. Then under quantity LTC, I will change it to order by cost. Very important. Change to order by cost. So if it's on limit now, I'll enter the price I want to trade at here. I'll enter my risk here and I'll go ahead and take either a long or short position. Then I can enter my take profit and stop loss. So this is simply where you place your trade. We'll come back to this. So what tools do you need to trade? I have mentioned one already, which is the exchange, and I recommend Bybit. Then you need TradingView account. This is where you conduct your technical analysis. They will have a Afibi position size calculator. You can download this for free on Google Play Store or the App Store. I developed this app. It helps calculate the exact leverage you should use per trade, which helps with risk management. And finally, you need a Telegram group, so you can join my community. This way you also receive my signals. When you join Telegram, please be careful. I will never send you a private message first on Telegram. Anyone that chats you up with my picture on his DP asking that you make an investment is a scammer. People have been defrauded this way, so be warned about this. The next thing is risk management. The app we use for risk management is the Crypto Position Size Calculator by Phoebe, the one I developed. Guys, the truth about trading is that no trader has 100% win rate. Sometimes there are losses. It is inevitable. If your trader has 60 to 70% win rate, that trader is a pro. However, a trader with a 40 to 50% win rate can still be profitable if he implements proper risk management, and a pro trader with a 70% win rate can still end up in a loss if he does not know proper risk management. So you now know that even the expert traders cannot win every trade. The question you should ask yourself now is, what am I willing to lose in the trade I'm about to take? This is my risk, and it should be between 1 to 5% of my total trading money. With this established, my risk reward ratio should not be less than 1:2. In other words, if I risk $5 when I lose $5, and when I win $5 times 2, which is 10. So if I take 10 trades with a 50% win rate, my total loss will be $25 and my total win will be $50, giving me a net profit of $25. I hope this makes sense. Once you can maintain this consistency, you can then use the accumulation strategy I have taught on this channel to grow $100 to $100,000 in a year. What the Crypto Position Size Calculator does is help me know the exact leverage to use to achieve my risk reward ratio. Now, let's say my trading capital is $1,000 and I want to risk 3% of this $1,000 per trade, which is $30, and I generated this signal from my strategy. It's a Litecoin USDC. I'm going short. Entry is 75.37, stop loss is 79.75, and take profit is 66.48. This is a 1 to 2 risk reward ratio. To know the exact leverage I will use for this trade, I will use the Crypto Position Size Calculator. So this is the app. The signal is a short signal, so I'm going to click on shorts. Then my capital is $1,000, so enter $1,000 here. My risk is 3%, I enter 3%. Now another way you can do this is to, since we already know my risk is $30, in capital I can enter $30, and in risk I'll enter 100%, so it is the same thing. Now what is my entry price? Entry price is 75.37 and the stop loss is 79.75. so my position size is 516. So if this is my position size, I have to choose a trade amount. In this case, I can still use my risk as my trade amount. So if I enter $30 here, it means that my leverage is going to be 17.2x. So if I use 17.2x as my leverage, if I lose $30. If I win $60. Does that make sense? Now I can choose to use a trade amount of $45. It means that my leverage is 11.5x. If I enter 11.5x as my leverage and put trade amount $45, enter my stop loss and all of that, the same thing will happen. If I lose only $30. When I win $60. I hope that makes sense. The reason why I said I like Bybit is like, it gives me ability to enter fractional leverage. This is 11.5x as fractional, but some exchanges don't let you do that, like Binance. So if I was trading on Binance with this, I'll go to this other section and enter my leverage. Now I can just enter 11, and this gives me 47. It means that my trade amount is going to be 47, my leverage will be 11, and the same thing applies. When I lose $30. When I win $60. Even if I make this 10, my trade amount will be $52. The same thing, when I lose $30. When I win $60. I hope this is clear. So this is how you know the exact leverage to use for your trade. So if I was to go back to Bybit to enter this particular trade, it means that since I'm going short, my leverage is 11.11. I'll put 11.5 as my leverage. That is for short position. I'll click on save. Okay, then here I'm going to enter the amount. Then I'll enter the costs. The cost in this case, since I'm using 11.5, I'll enter $45 here, and I'll click on short position. This is how I enter my trade. At this point, guys, if you have not given this video a like, just let me know in the comment section why you have not. If not, please smash that like button. Now that you know risk management, let's look at the trading strategy, the ICT Trading Strategy. In this strategy, we want to take a long or short position after a liquidity sweep. Liquidity sweep is where there are large concentration of orders, usually at the previous day high and low. When this liquidity region is broken, we call it liquidity sweep. Price usually retraces or changes direction after a liquidity sweep, looking for equilibrium or the opposite liquidity. We look for entries after the liquidity is swept. Now let me show you some samples, right? So this is a previous day high and low, and you see the chart starts here. Once liquidity is taken this way, it comes down. This is the point we are looking to enter at, all right? And there are different versions of it. Sometimes we might not find an entry. For this one, there's no entry. For it didn't give us an entry. Liquidity is swept and it just flushed down. This one, liquidity is swept, it flushed down, but this one seeks equilibrium and then comes up. But this one, the same thing, it came this way, swept liquidity, went up, came and gave us an entry. But the thing is this: how do we know the exact place to enter? We have to look at these three types of block: the order block, the breaker block, and the mitigation block. Now, the order block, look at it this way. You see this one in yellow is my order block, right? So this is when price is going up, right? It goes up, it comes down, this is our entry. Now for this one, price is going down, this is our order block. So it goes down, it comes back up, this is our entry to go down, right? So this is the order block. The same thing with the breaker block. See, price goes up this way, comes down, comes this way. This is our entry for a market that is going down. For market going up, this is our entry when it comes down and then it goes up. The same thing with mitigation block. This is the mitigation block. If you look at all these blocks, you can see that the entry all the time this candle does not exceed it. The same thing with this one, it doesn't just pass this block. So this is for the mitigation block. Now, what makes these links valid is what we call the fair value gap. What is the fair value gap? So if you look at this, you have these three candles. You have candle A, B, and C. This is the gap between candle A and candle C. That gap is called the fair value gap. The same thing for a market that is coming down. This candle A, B, C. It's a gap between candle A and candle C. So call this the fair value gap. So if you go back and look at those blocks that I talked about, you can see that all of them has a fair value gap. The other block, because it has a fair value gap, that is what makes this other block valid. If this closes this way, then we will not consider this an other block. So for breaker block 2, there's a gap between this candle and this candle. For mitigation block, there's a gap between this candle and this candle. This is what makes these blocks valid. Now, let's take the other block, for example, this particular one here, right? You see that liquidity sweep? This candle is meant to actually sweep that liquidity, right? Once it sweeps, it comes down, we find a fair value gap here, then we can comfortably put our entry at this point. So if you go back to this movement up is sweeping liquidity, so we're expecting either an order block, mitigation block, or a breaker block here. Then if it comes down, there should be a fair value gap here, and this is going to be our entry to take it to equilibrium or even further down. Now, to make all this make sense to you, let's go to TradingView. So I'll just show you a step-by-step process on how to set this up. So this is a Litecoin USD trade. Now, if you want me to make a video on how to set up your TradingView to be like this, let me know in the comment section. So now this day has gone, but the trading day starts at 1 a.m. West African time, right? Whatever your time zone is, you can, find a way to fix things at that time. But 1 a.m. GMT plus 1 is the time the trading day starts. So I usually trade at the London section. So how do you take a trade? You start by going to the daily time frame. This is a Litecoin USD trade. You go to the daily time frame, and what you do is that you consider the previous candle. At that time, this candle is just beginning to form, right? What you're looking at is the previous candle. You want to mark out the highs and low of that candle. So I'm going to pick this horizontal array. I'm going to place it at the top of the previous day, right? I've already set this. So I'm going to label this yesterday high. Okay, yesterday high. I'll pick another one, put it at the previous day low. So I'm going to also label this yesterday's low. I can set this all this up, it's easy. Then I also want to mark out the equilibrium. Equilibrium is halfway between this top and this low. So I use Fibonacci to help me to start it. My 50% mark is the equilibrium. So I'm going to pick this again and put it at the 50% mark. So I can delete my Fibonacci now. So this is my equilibrium. I like to give it a different color. So this is my equilibrium. So this is what I do when I wake up. Right now, I can now go down to the 15 minutes time frame. So the way I set my chart is, you see this line, it automatically draws, this is the 1 a.m. right? This is 1 a.m. West African time. This is the time the trading day starts. And you can look at this. This is my previous day high. This is my previous day low. What happened here? I'm waiting for what? A liquidity sweep. What happens? The chart came up and swept liquidity here. What does it form here? An order block. So this candle becomes candle A, B, C. There's a fair value gap between candle A and candle C. There's a fair value gap. So what I will do now is to wait for this to come up, right? Once this happens and the candle at this point start coming up this way, then I will drop my Fibonacci. There's a setting I already have for my Fibonacci. I'm going to now pick it up. I'll pick the Fibonacci up. Then I'll place it at the top here and draw it all the way down to the bottom of this candle when it first time moving up, and I can now extend it, right? So what happens is that this yellow line, the golden ratio, right, it becomes my entry at, I'm going short now. This 91.73 is now my entry. My stop loss is the top 92.41. And look at my take profits. I have them. This is the first take profit, second take profit, third one, and the fourth one. So you can see that when the trade is still here, I have drawn this, put my limit order to enter here, put my stop loss, I can go and sleep. So when the chart comes up here, my trade automatically enters, and when it goes down, my profits start taking profit 1, profit 2, profit 3, and profit 4. So this is what I was telling you. You can see that this actually came, swept liquidity, and what it went down to sweep the liquidity below before turning up to go back up again. So by this time, I'm actually done with my trade for this particular day. I just wait for the next day to take another trade. Guys, it is also good you do a lot of back testing with different assets. Some assets work wonderfully with this strategy, some does not. But notice that Litecoin actually works perfectly well with this. And guys, you can see that this is a full tutorial. You can't get this anywhere else on YouTube. Now, if you want more details on other block, breaker block, mitigation block, risk management, and a lot more, because I couldn't give you enough detail in this video because, it's a YouTube video, you can consider taking my course on this. I detailed this out and not in a rush to actually make this fit into a YouTube video. The course is currently on Udemy. It will also be coming up on Phoebe.com soon. I'll leave all the links in the description for you guys. If you want access to my Signal channel to get all the amazing results, sign up to Bybit with my link in the description. If you have not already, then use the Telegram link in the description to join that channel. The Signal channel is free for today and the whole of April. After that, it will be paid. So enjoy it for free while that lasts. At this point, guys, if you have gotten a lot of value from this video, you have to let me know by doing these 3 things. 1 is subscribe if you've not. 2, like the video if you have not done so. And 3, share with your friends on Facebook, Telegram, and WhatsApp, Twitter. Share everywhere you can. Let somebody else benefit from this tutorial. And finally, guys, know that this video is number 2 of a 3-part series on how to trade cryptocurrencies. The first one is spot trading. This is a futures. The next one will be options trading. If you want me to make that options trading, in the comment section type Jude, make the option trading video. Once I get 100,000 views on this video, I will make that video. And this is why you need to like and share this video.